Welcome back to the Plan Your Federal Retirement podcast. I'm your co-host, Micah Shalansky, and with me back is the amazing Tammy Flanagan. Tammy, how's it going?
I'm doing great, Micah. I'm glad to be back, and I'm excited about our topic today.
I'm very excited to jump and chat on it too. It's really good to go in there. So Tammy and I, when we record these, just schedule-wise, doesn't always meet every couple of weeks. So sometimes we record them up, and it's been a little bit of a break. I know I did a little bit of traveling too, and so Tammy, it's just great to jump back on the pod with you. So thanks again for making the time.
Oh, sure. Happy to be here.
I was just teaching a group of advisors, actually, just kind of going through retirement income, how to build this and set up and go through things. And man, I love doing that because you also hear a lot of different ways people are doing it. But one of the things that an advisor had kind of called us out on, because he listens to our podcast, Tammy, and he says, I hear you guys talk about everything that you guys do and the effort you put into transforming people's lives. Oh. And that's really what we're trying to do on this podcast. I was really touched by his comment on that one, because that's what we want to do is transform your life as a federal employee. You have these great benefits, you have this amazing set, but you got to know and you got to understand it. You have these great tools, but you got to put them to work in the right way. And so hopefully in this podcast, we're going to help with that.
You put all that time and years of dedicated service, and you've worked for this, and you should get the benefits that you deserve. So I'm really an advocate for people who are having trouble finding the right answers, or maybe something went wrong and they got to get it fixed. I try to really help people go that direction because it's important.
Yeah, 100% is. And I love that. Get what you earned. All right. So on that note, we're going to kick it off by really understanding a key part, which is your FERS benefits. Now, we talked a lot about how FERS works, right? And how your pension benefit works. I know they call it an annuity. We call it a pension. But we want to dive a little bit into demystifying the calculators that are out there, because there's a few different types of calculators and how you can get your benefits, whether it's your FERS benefit, your Social Security calculator, your TSP, maybe it's a retirement calculator, all these different things, and they're all good tools, but just like any tool, you got to use it for the right purpose, right? And so that's what we're going to talk a little bit about. And I know, Tammy, there's the new system now, I think it's the GRB system, that federal employees can actually, a lot of agencies now, the federal employee can run their own federal benefits estimate. Is that right?
That's true. In fact, GRB was around since FERS started back in the 80s, because I remember I was working at the FBI back then, and we used to have their person that designs the software. He'd come in and he'd practice on us and say, how does this work? Do you see any bugs in it? Would help him debug it. So it's been around for a long time, but it's never been user friendly. It's always been something that you had to know how to input the information. You had to really work in personnel office to be able to do it. But now they've transformed it to some type of a user friendly, I suppose, platform that employees can do it themselves. And it is helping, because that puts some of the burden off of the personnel office. When employees want to update their date of retirement, they can just go in there and put a different date in. But from the standpoint of making sure that the output is accurate, I think there's a little more to it, just like there is in any computer printout. You got to be careful that all the data that's going into it is really accurate. And I think that's where you have to be real careful. And that's why I stress so much in my seminars about knowing what counts and what doesn't count, really looking at that service history.
It's just huge, right? And we talk about it. It's that acronym, what? GIGO, garbage in, garbage out, but also good in, good out. Better information you're inputting, the better the result. And I like to say, maybe this is just too selfish, Tammy, but please don't make us the bad guy because you didn't understand your benefits, right? You come in thinking you're getting these great benefits, and you have good benefits, but they're not as good as you thought because you had some wrong data in there. And the worst thing that you want to do is go into retirement with that assumption, and then OPM corrects your misinformation and you retire on less than you thought. And that's really what we're striving for here. We don't want that to be you. We want you to be armed with that information.
Yeah, it's much easier to make changes while you're getting a paycheck every 2 weeks rather than when you're home waiting for that first retirement check and it just isn't coming.
Amen.
Or it comes and like you said, it's $1,000 a month less than you expected.
Yeah.
And I've seen that happen. I've seen that happen just recently.
Yeah, it does. All right, so let's dive into this a little bit, like self-running your calculator versus HR versus you just on a piece of paper kind of running it. Now, I actually didn't know this about Tammy. We were kind of pre-gaming and talking about the podcast, and she shared a little bit, and we actually end up doing it the exact same way whenever a client comes in, how we look at their benefits. So, Tammy, do you want to share that with the audience real quick? Oh.
I'm holding up a $5 calculator that my husband probably bought bought at Best Buy. And that is how I run my estimates. I sit down with a sheet of paper and a pencil. I sharpen my pencil and I start subtracting the dates of service. If they had different periods of service, military service, not too hard to subtract a date, just like second grade math. One's tens and hundreds now is days, months, and years. And then, I run those numbers. The formulas couldn't be easier. 1%, 1.1%. Who can't multiply by one? But the hard part is, and this is what takes the time, is before I do any of that, I ask for all the documentation of somebody's career. And especially I want, when did you start? When did you leave? When did your retirement coverage change? When did your work schedule change? I need to have all of that data because that's going to make a big difference in the outcome. The numbers, running the numbers, that's easy. But it's making sure that all of those service periods are documented. I had a guy who he put in for his retirement. Now, he didn't have that much service. I think in the end of the day, I think he had 9 years. But OPM came back to him after he filed for his deferred retirement and said, you only have 3.5 years. So that means you get nothing, right?
Nothing, zero.
So he reached out to me. He says, I know I had 9 years. I didn't have 3.5 years. Well, they didn't have the documentation. They didn't have the records.
Yep.
And that's especially hard when it's a deferred retirement because your agency didn't put that together.
Yeah.
You're relying on hopefully that all that information ends up at OPM. And so we got it fixed, but it took some time.
And he's lucky he had the documentation to fix it. If you don't have that,
we had to go get it.
Oh, you had to go get it. Yeah, it was lucky you can get it because what happens in the case that you can't find this documentation or you can't get it right? These things
you have to know where to look.
They become complicated really quickly, don't they?
Yeah, so that's why I think it's so important to really ask questions because the average federal employee doesn't know what counts and what doesn't count.
Right.
We could probably sit here for the next 6 hours and telling them, this counts and that counts if it's before this date or after that date.
Right.
So that whole thing becomes pretty technical. But what you've done. When you started. When you left. What agencies you worked for. So make a list. And if you don't see records of that in your personnel file, get in touch with somebody who does know how to find it, who does know what counts and what doesn't count. And that's usually somebody in HR, even though they may not want to run you an estimate or, help you counsel you for retirement yet, they can certainly answer questions about making sure that service has been accounted for. If you owe money for it, they can tell you how much you owe and help you make the payback because all of that stuff should be done early in your career, not 2 months before you retire.
Yeah. Amen to that.
Which unfortunately, a lot of people don't realize that. And it comes to the day of retirement, they realize things are missing.
Tammy, as you're sharing this, one of the things that dawned on me, this is the exact same way that I approach almost all areas of a financial planning with a client. To start off with estate planning. When a client comes in, I always ask them for their estate planning documents and I kind of hold them on my side of the table. And I'm like, okay, Bob and Sue, God forbid if something happens to both of you, where do you want to see the money? And they have such a tendency to say, Mike, it's right in the documents to reach for them. I'm like, no, you can't reach for the documents. Tell me what you want. Right. And then now they've told me what they want. Now I have the documents and I look at it and I say, do these actually match? And a lot of times they don't. Right. But if they would have looked at the documents, they would have said, oh, yeah, that's fine. And that's the same thing when you just start looking, I think, at these benefits. I'm just, oh, yeah, that's fine. Okay, it might be, but it might not be. And so this is why this step is so critical. And it's so easy to bypass. You know what? My HR has it. I've worked for this, blah, blah. It's the same agency. I don't need to take this first step. But I got to tell you, and this is the first step that we do. Why do we do it? Because it's key.
It's the most tedious part of it. It's the most technical part of it, but it's the most important part of it. Because the rest of it you can do yourself. I think the average person could do a lot of what we're doing, but if you don't have that foundation, everything you do after that's going to be wrong. And that's what I have against, the do-it-yourself calculators, or even like sometimes you'll go to your agency who has all the good intentions of preparing an estimate for you.
Yeah.
But they don't go back through your records. They're using that leave SCD that's on your personnel action statements, which may or may not be accurate. So I really think you have to take the time to look at everything because it can make, like you said, it can make hundreds, if not thousands of dollars of difference.
Yes, very, very much so. So before you do any of those calculators, because as soon as you do them and you look at them, you're now going to be biased, right? You're now going to be using that information. So before you do that, I would start there by writing it out. Then let's see what the calculator says. And just like Tammy said, I do the same thing. I manually do it on a piece of paper, write it out real quick. Then I start looking at it, grab the estimates, and I'm looking for discrepancies. Now, if everything matches, like years of service and high threes off $12, whoop-de-doo, I'm not super concerned about that. I'm looking for bigger gaps. Mainly, it's the service. Mainly, that's the mistake that I see. Sometimes it's the retirement date. I'll also see that one as a potential mistake that's going to be there. Nets is always different, right? All the deductions, that's a separate conversation to have. But those are the two main things that I'm looking at that I see errors in. What about you, Tammy?
I'm laughing because I can remember this time I was teaching a class at EPA. And this man, he said to me, I have 3 different estimates and they have 3 different numbers. My personnel office doesn't know what they're doing. I'm like, well, they're probably for 3 different dates.
Right. This year, next year, 3 years.
Right. I'm like, yeah, you got to know you have to know where that estimate's coming from. Because if you don't, you're in trouble.
Yeah. And so we pulled up a couple estimates that we got from, Fed HR that the clients have sent over. So a couple things kind of jumped out of us when we were first looking at these, Tammy. One of them that jumped out was the retirement date. It had retiring at the beginning, the separation date at the beginning of the month. Now, I don't know if this was automatically generated or if the client just inputted that. So I'm not trying to blame the software at all. But right there, of course, we want to retire at the end of the month. So our pinch is effective the first of the following month.
And they may have put in the last day of the month and then the software put in the date the annuity commenced on the first day of the month. You don't know because you don't know how that software was designed.
Mm-hmm.
But I've seen that too. And I keep thinking that's probably what it did, but it doesn't tell the person that.
Yeah. So these are just things to watch, right? And just make sure when we're filling out the retirement application, what goes on there. Because I've seen that. I've seen annuity start date is the first of the month. A client fill out a retirement application and they put that same date right there because that was the date on their retirement estimate. It says, okay, well, we need to fix that.
Yeah. And if you put a date on your application that really wouldn't make common sense to you and I, like you'd tell your client, hey, you don't want to do that because it's going to, you're going to lose a month of retirement. Well, if you put that date on, it goes to OPM. That's the date they think you wanted to retire. Right. They're not going to come to you and say, hey, are you sure you want to do that date?
Yeah. Do you know there's a better date and we could change this? Yeah, that doesn't happen.
That doesn't happen.
The other thing, so on the first page, it just kind of breaks down service. Now, with this particular client, and again, I'm not blaming the software at all. I don't know the data that was inputted in here, but the client has military time. And that's the first thing that I kind of saw when we were looking at this, Tammy, is that there's no military time added in this estimate.
Yep. And that's a big loss of things. A lot of people, even I talked to today, don't know you have to pay for it.
Yeah.
I mean, I thought everybody knew that, but I did a class the other day and someone said, well, what do I have to do to get the credit? I'm like, well, you got to make a deposit. Well, how do I do that? You have to go back to basics. So yeah, some people are a little bit more informed than others, but I know there's some people who are so busy working all these years that they don't know the first thing about planning for retirement as far as the paperwork, the benefit amount, exactly how that's determined, what's the survivor benefit going to cost. And what's a reduction? What's a withholding? Because those are two different things too.
If you fall into that camp, try not to get overwhelmed. I know it's easy to do. This is not your area of expertise. You're going to get real familiar with it, right? But start that one step at a time. Keep listening to the podcast. Go to a class that Tammy and I teach, or anyone who's really great that's teaching classes about federal benefits, and just start learning little bits at a time.
And ask questions. Yeah, because I don't care what the question is. I love when they ask stupid questions. I'm an excellent person for stupid questions. That's my specialty. Yeah, I don't care, Ian. No question is stupid because I've had PhDs come to me with the most basic question because this isn't what they do. This isn't what and it is confusing. Sometimes you read something once, twice, 3 times, and you're not sure you understand what it said.
Yeah, and actually, it's kind of funny you say that. I think from a lot of times my higher educated clients that are retiring from NASA or doctors or whatnot, they'll get frustrated because they're like, I just don't get this, you know? And I'm like, all right, well, you're an expert in your field. Like if we want to talk about how to go into space, I got nothing.
No idea.
No idea, right? There's some laws of physics you probably got to comply with. I don't know. That's about it, right? When it comes to this is the area that I know. So just because you're highly educated doesn't mean that automatically transfers into area you have no experience in. And so start that education process.
That's right. Yeah, I hear that all the time from people. They'll come to me and they'll kind of sheepishly call and say, I feel stupid, and I know I'm educated. I know I've done a good job at my work, but I just don't understand how to make the decision about Medicare or how to figure out how to fill out this application.
Yeah.
Because there's language on there that has double meaning. We know the
Yes.
word postponed and deferred. Those are words
Hmm.
that are very specific, and a lot of people don't realize what the difference is.
Huge. So getting back and just looking at this federal estimate going down. So one of them, of course, is that years of service. Tammy and I were just preaching about that. What counts, what doesn't count for years of service? Is it taking just your SCD for leave, or is it taking a retirement one, which is good to know? Another thing, Tammy, that I just saw in here, we didn't talk about it in our preview game, but I'm looking at the gross versus the net. And this will jump right out at you. It shows the gross benefit. It has a reduction for survivor benefits. It has life insurance, and it has tax withholding, but there's no
Health
FEH.
insurance.
Yeah. There's no
Yeah, I
health
bet the
insurance
tax
deduction.
withholding is way off too.
Yeah, I was going to mention that one too. Yeah, tax withholding is way off. But there's no health insurance, which is a pretty sizable deduction. You're
Pretty
talking
significant thing, right?
$500-600 a month here.
Mhm.
That's going to be out of your pay, and
Yeah.
that's not in this. So when a client, and the reason I bring this up is a client comes in, most of the time they're looking at the gross number when they're talking to Tammy and I, and they're like, look, I'm going to get, $2,500, $3,500 a month. And we're like, yeah, but that's gross.
Yeah, it might be a lot less,
And
just
we
like
got
your
to,
paycheck.
just like your paycheck, and we got to start reducing it. And it doesn't make your pension bad. You got to know how it works.
And then again, that sometimes you underestimate because you think, oh, this is it, because this is my government pension. But we forget there's Social Security, there's TSP. So when you put all that together, it looks a whole lot better. But you have to make sure you're looking net, right? Because the
Yes.
gross of anything is useless, because that's not what you're going to get to spend. That's not your income.
Now, Tammy, one of the things that I like about this, I think it's on page 3 in this particular estimate, is it has a timeline breakdown of, if you retired in kind of for the next several years, what income's going to be there. I love the concept of it. The accuracy is I don't really care for right now, because the Social Security, I pulled the clients, this was ran within a month of him actually getting a Social Security statement. The Social Security benefit is off by about $5,000 a year. The GRB benefit is saying they're getting $5,000 more than what they're actually going to get from Social Security.
$600 a month, isn't it? If I'm doing my math right.
That's a lot of money right there.
A lot of money when it comes down to paying your bills or going out to eat. Yeah.
Yeah.
You need to know. I mean, when you take a job, you want to know what you're going to get paid. So when you retire, you want to know what your income is going to be to make sure you can afford to stay in your house or take a vacation once in a while.
Yep.
So yeah, I just think it needs to be more precise, and it really can't be unless you have a conversation and ask questions.
And the other part of this one too, and I know, Tammy, you saw it too when we were looking at it again, what this is doing is it's showing you all of your gross income. But guess what? Social Security, whatever it says in the statement, that's not the amount you're going to get, because IRS is still a part of your Social Security. You got to pay taxes on it. Once you're 65 and under Medicare Part B as in Bravo, Medicare is going to be coming out of that as well.
Out of it too. That's right.
So you're going to have those deductions out of that net Social Security check. So again, I love the concept of this. I'm not trying to rag on it, just to say, hey, here's the good parts, here's the bad. Good part is it's telling you, hey, your income's going to change over time. I love that. What you have to do as the individual, or if you work with a professional, is they're going to draw out and say, not your gross, but your net. What are the real numbers, and how much net income would you have in these time periods?
Yep. And, projecting it out in the future, as far as projecting if I retire 5 years from now or 10 years from now, or does it say this is what the value of this benefit's going to be?
I am not sure.
I think it says, okay, if you retire next July, then 5 years from now it'll be worth this, or 10 years from now, because it's projecting inflation or no inflation.
Yep.
But what good does that do? Because nobody knows what inflation is going to be in the future anyway. So I'd rather know that it's enough now with enough of a cushion, so that no matter what happens in the future, I can adjust and I can still be okay.
Yeah.
So yeah, it's hard whenever you don't really know what you don't know.
I would say another mistake that kind of I see inside of this, Tammy, let me know if you do the same thing, is that younger clients, maybe with that 5 to 10 years out before retirement, they're like, oh, well, I'll be a higher GS level at that time. So let's, make my high 3 larger. And that's one way to look at it. The only thing that I add to your pension calculation is your years of service you'll be at retirement. I take your current high 3. I don't mess with any of that inflation, especially within 5 to 10 years. I don't mess with any of it. What's your current high 3? You're going to work another 10 years. That's about it. I'm trying to be a little bit
I
more
project the
conservative.
sick leave usually too, because I want
Oh,
to show
yeah.
them if you don't use any sick leave, here's what you got.
Okay.
And here's what a month of sick leave is worth. Because some people overestimate the value of sick leave.
Yes.
It might be $5 or $7 a difference for each month, but here's what it is. So like if you need to use it, use it. That's going to help you work another 10 years perhaps.
That's a great one. Using it for kind of that mental health and whatnot, taking that sick leave time and then allowing you to work longer is such a better return on your money than banking your sick leave.
And, when it's a mid-career, or like I had a guy ask me the other day teaching, he's like, do you recommend that we just use our sick leave before we retire? I'm like, what do you mean? Then I said, you can't just tell your supervisor, I'm going to be on sick leave the next 6 months.
Mm-hmm.
And if you're a mid-career or a brand new employee, I would definitely never tell you just use your sick leave, because that's your short-term disability protection. But if you're 5 years from retirement, you've got a year's worth of sick leave and you're dreading, working another 5 years, how are you going to get through it? Or maybe you have a parent or a spouse who needs some help. You can use that Family and Medical Leave Act and don't feel like you have to be a miser with it at that point, because it is worth more as a paycheck than it is to add it on to your retirement. And if that allows you to work another year, I'm all for it.
Yeah, I'm 100% with you. It's the benefit to be used, not to bank forever. So those are things to be thinking about as you're looking at these different estimates, right? Now, there's also other great calculators, or I should say other calculators out there. There's the TSP calculator. I don't use that, though. I've only seen a client bring it up once or twice. I don't use that for projection purposes. Tammy, any experience with that?
Yeah, I don't use it either, because everybody's goals for their TSP account are so different.
Yeah.
I mean, if they wanted to take a TSP annuity, they did put that annuity calculator back up on the website, which is pretty accurate. If you're going to buy a MetLife annuity through the TSP, it's going to tell you, here's what you're going to get if you buy it this month. But you don't find too many people wanting to buy the TSP annuity.
Right.
They want to know, like, how much can I take out each month? Or should I move it out of the thrift or in the thrift? I don't really get a lot of questions about when's it going to run out. It's more about just making sure I'm making a wise decision, if it's enough there to supplement those other two benefits. Because to me, it's the icing on the cake.
Yeah, I agree. There's also a Social Security calculator. I got to say, Social Security statements have become a lot more accurate. So I don't see depending on how far out you're retiring versus applying for Social Security, I don't see a lot of mistakes being made on those Social Security calculators, with the exception of the windfall elimination provision. For those few people, we still have State of Alaska employees that don't pay into Social Security, so we see it more on that side than I do on CSRS. But if you're subject to that, that's going to be a discrepancy that is not included in that Social Security estimate that you get.
Right. But there's a really easy, user-friendly calculator for the windfall provision on the Social Security website. So when I do get that rare CSRS employee, I'll ask for their statement of earnings. And then I just plug it into that calculator. Takes you 5 minutes to do it.
It's great.
And then it'll tell you, here's after the windfall, here's what you're going to get. Here's what happens if you work till you're 70 and still the windfall is factored into it. So I love that. I love that they have that on there, because it does make it much easier to explain that to somebody. And if you had to do it yourself, I don't think anybody would have trouble doing it. It might be harder finding it than it is to actually work it.
I was going to say, once you find it, you're good.
Yeah, put windfall calculator in the search engine, it'll come up.
I would say the other thing on Social Security, the one I don't see on it, now I haven't looked at it in a little while, so maybe I need to pull it back up. I would love to see a better spousal comparison. It's not on there, so that just means you have to be able to do it. It's something we work with our clients on, because when you turn your Social Security on, and Tammy, you and I have talked about this on previous pods, that affects survivor benefits and spousal benefits. So this isn't a just you question. It is a we question when you're applying for this. And I'd say that's a mistake that I see clients get in the mindset of, this is my Social Security, this is your Social Security, and thinking they're independent levers when they're slightly connected.
Yeah, and that spousal benefit and even the widow's benefit, that's really hard. If you were going to sit down with my little $5 calculator, you'd have a hard time doing it, because everything's based on your full retirement age. So what the spouse gets if they apply at 62 is still based on your full benefit and their age. So it's really difficult to really explain that to somebody, or to really sit down and try to compute it for somebody, because it is such a different calculation. It's more complex, I think, than the FERS calculation by far.
Yeah, that's a great point. I almost never do it that way, right? I mean, there's quick math off the top of my head that I kind of know where it should be.
Yeah,
But
right.
then when I'm looking for details, I always use a calculator. We have a professional one that we pay for because it just puts everything kind of side by side for us. But yep, we always do that.
The whole thing with filling out the application too, that can cause some problems. If nothing else, it causes a delay. Because if you
Mm,
don't answer all the questions, that's one of my pet peeves. I always offer to review somebody's retirement application because I'll never find one that they didn't forget something,
yep.
you know, especially on even the life insurance one.
Hmm.
Because if, let's say I don't have option A, they just skip that
Just
whole
skip it.
question
It
when
just
you
doesn't
have to
apply.
say, I don't have, you have to check the little
Check the
box that says,
box.
I don't have option A, or you'll be getting that back and your retirement goes back on the pending pile.
Hmm.
So there's little things people, employees can do to make things go a little smoother. Look things over twice, read those directions carefully.
Yeah.
We've seen so many people lately putting the wrong retirement date down when they're applying for a postponed retirement.
Whew.
And I've had clients lose their entitlement to health insurance
Yeah.
because the law is clear. It's not clear on the
Well,
instructions, but
yeah.
the law clearly states what they can and can't do. So, I've been trying to fight these and you really can't. They have to just change that form so that people understand how
Mhm.
important it is to put that right date down.
Yeah, that's the big thing, right? The forms are we're not attorneys, not legal advice. All those appropriate disclosures go here. The forms are not the law. They're not the rules. It's a form to apply for something. And
Mhm.
so that's, I think, where some people definitely, Tammy, you hit on it. People get mistakes is they read this, like, no, Micah, look at what it says. I'm like, I understand that, but that's not actually the rules. And we go to the rule book and we pull out the rule book, which again, the rule book comes from the laws, right? And
Right.
you'll look at the OPM handbook and be like, look, that's not what it says to do here. Let's err on the side of caution. If in
Mhm.
doubt, and that's, Tammy, I think what both of us try to do is some things are questionable on how we need to do things. Err on the side of caution because sometimes the penalties of being wrong really outweigh trying to be more aggressive with your benefits.
Yeah, it's tough because I've seen even the personnel office, and I myself took a long time to figure out what was going wrong with this case because I'm
Yeah.
like, why won't they fix that? But it was because I reread the Code of Federal Regulations. I had to go deep into the law to
Oh,
see,
wow.
oh, that is
Hmm.
what it says.
Yeah.
And then I knew why OPM wasn't agreeing to do these backdated benefits to put the health insurance back in place. So it's a hard lesson to learn for some folks.
Well, Tammy, like normally on our podcast, we've gotten halfway through our agenda, and I look down at the clock, and we need to wrap it up.
Wrap it up.
But these are always so fun to do. But these podcasts are all about action
Yeah.
items. And I'm going to say kind of the first action item, if I may, I'll take the easy, low hanging fruit. You said it at the top of the pod. Get your documentation. That has to be where this starts. It's not what you think your service is. It's a great exercise to write down what you think your service is. I love that. But then you have to verify that. And we only do that with official documentation.
And if you get a chance to attend a pre-retirement class or even online training, there's TSP does an online class and ITP
Mhm.
does an online class. So there's places you can go to educate yourself, to learn about what counts and what doesn't count. And maybe you owe a deposit. Because when I teach that, I always tell my students, I say, write down a to-do list. I said,
Mhm.
I'm not going to be telling you what to do today, but you're going to know, oh, that applies to me. I need to find out some more about that. So ask questions, take training when it's offered, because this is the rest of your life. This is a really important change in your life that can be very valuable. And you can miss out on some of that if you don't get the benefits right the first time.
100% the case. Yep. And share this podcast. We have a goal of transforming the lives of federal employees. And the only way we can do that is with your help. So share this message, get it out there so we can kind of spread the word. We are going to be coming with an online class called Retire Fit in the next couple of months. A little short series for you guys to help you get more educated on your benefits. Tammy, as always, thank you so much for joining. And to our listeners, till next time, happy planning.